Welcome back everybody into another daily recap. Today is Wednesday the 22nd of February and is the FOMC minutes day. So as you can see here, let's just start with the London session. So this morning I was not at the charts. What I was looking and in hindsight as per backtesting is that we saw during the London session, as you can see 9 AM, we had this aggressive bearish candle, bearish around 9 AM, which is London Open. This aggressive bearish impulsive move started from 1841 down to 1833. We then saw another block and then a liquidity grab with the rejection. This is the other block. Liquidity grab with the rejection at the 75% retracement tool. 75% retracement. And key level 1836 with possible entries for like 10 pip, 30 pip, so 3 to 1 risk to reward, and down to the following area. 1832.5 was already charted up as a strong 15-minute PSA. What we can identify and see is that we saw it's a clear double bottom, sorry. And then what we see, yes, we still failed to make a new high directly, immediately. Remember that we are now in the late London session, but what we make is actually a new higher low. You can see it here. Price fails to make a new low, retests this leg of the double bottom, and it's also sort of a triple bottom, I would say, and then starts to make its way up. So as scalpers, we can identify these candles as the shift in market structure. Of course, this would be very high risk high reward, but since we are below the PPL, I would love to see this strength to be in the table before coming back up. So as you can see here, this shift in market structure could have given you also this candle confirmation, of course, for less pips. So this is the first candle confirmation breaking above these previous highs. That's a 48 pips. Then the safest entry will be above this previous level and 1836 key level for like 30 pips. After that, what we see, of course, we stick to the bullish bias and we identify that we have a, let me show you here, 70. I would say now this is like a 50% retracement, yes. It's a 50% retracement of this overall move, but it's very important to see, identify where we are reacting. We are reacting at 1836 key level, 1836.1 PPL, giving you 1, 2, 3, 4, 5 candles closing above this level and give you the confirmation. I didn't send them. Let me just send them quickly over here. Just give me a second. Okay, as you can see here, I was watching it. I was watching the retest of the key level, overall 50% retracement. And of course, I was not at the chart and say, okay, this is looking very nice for buys. And that's actually where you go. The scalp would just be to the previous highs, so 30 pips. But still, since it's a 10 pip stop loss, that's absolutely reasonable, I would say. And with a very good risk to reward. Then what we see and we can identify is the breakout of this level with possible entry at this bullish candle, or with the confirmation that we are closing above. This will play out for more than 60 pips basically up to the next level. Also, this one was identified early on, as you can see here. You can see it here. That's the trade idea that actually played out very nicely for more than 30 pips. Again, this is a 10 pip stop loss, so 30 pips scalp is still very, very good. What we can identify then is a strong reaction at 1846 PPL, and also you can see it on the left hand side how strong of this is a strong price action area, almost tapping it, and that's where we saw the first reaction slightly above the 1845 strong supply area. As you can see here, not a single 15-minute candle closed over there, and you can see how strong this whole area and zone it was. So when we identify, yes, first we have this very strong bearish candle. By itself, it is not really an anti-confirmation. I will say that it's a little bit too aggressive. We can, when we have the confirmation of the shift in market structure, is when we have a strong bearish leg. But yes, we are still above this level. We have this high risk, high reward entry because now price is making a pullback from a possible support, but is showing you weakness because it's failing to make new highs. So it's showing you that is not able to make a new high, but is actually failing and getting rejected. And yes, a price could make a double bottom over here, but still this is a very good kind of confirmation. But the best would be, okay, I just wait, I will just grab my piece of the cake when I see a clean closure below 1840, strong PSA. So now this shift in market structure is confirmed because we had multiple price action confirmation of a price staying. And when we have this retest, then we can enter for like 13 pips to 40. Still a very good 3.1 risk to reward ratio, and down to these previous lows is absolutely nice. With all the confirmation, yes, a high risk, high reward entry would have given you 100 pips, but yes, that's way too risky. Then staying with the same bias, because we can identify that we are staying below these previous lows. This last lower high. This one is the last lower high, making new lower highs after making a new lower low. So that's higher, lower high, lower low, lower high. This is even a lower low, but you have plenty of confirmation here during the New York session. Yes, the start of the new 4 hour is quite choppy. If I was to trade over there, if I was to trade during this London session, New York session, I would have been having, let's see, what possible trade idea. So we are here. I would take sells below here or possible pullbacks over there. This is very messy because this PSA is not really being respected. The only thing is that, okay, what we can add is the timing of these candles. We have New York Stock Exchange opening, lower wick, upper wick, and then failing to make new highs. That's a very high risk, high reward entry for more than 58 pips. Now, in this case, a 20 pip stop loss would be quite necessary, I would say. And but yeah, we have multiple confirmation. This is even basically the 10 a.m. candle. Yes, that's the end of the hourly candle, making another rejection. No news, so we are still making new lows. As you can see, we are still making new lows. So far the bearish price action is being respected. Maybe we can possibly also place a retracement tool and see, yes, that 75% retracement has always been respected, and that's where we could have our nice entry at this candle closure. Still 58 pips. Now maybe if we consider the order block as per trade idea, we can also give like a 15 pip stop loss instead of 20. But yeah, that's basically it. That's basically the price action. After that, we have a strong, this is the same PSA. So if you were on a bullish bias, that was your trade idea, because that's where you have a strong liquidity. As you can see, 1832 has actually been very, very strong, acting very, very strong. And that's where we could have had a very high risk, high reward entry for more than 50 pips on the upside, full correction, but still, as you can see here, failing to make new highs, still respecting this PSA, and then also having the retest below 1837.5. So maybe if you don't take your high risk, high reward entry over there, you see this reaction, but we have multiple failure to break above 1837.5. So like not really like here, but still showing you bearish price action because buyers are not able to push up. Then what we have is the retest of these previous lows, and that's where the continuation down. So this is even very nice entry, very possible, very easy, safest entry. So we have the high risk, high reward entry here, medium risk, and then we have the safest entry. When we have the breakout below, we are making a new lower low if we identify the market structure, and that's where let me just show you. Okay, that's where you could have had multiple candle entries. The closest to the PSA and key level, the better. You can have a candle closure. In this case, you could set whatever stop loss. A 15 pip stop loss will also cover the last lower high, which will make sense. And then to make a new low, in this case, you will need a 45 pip win. Still getting it after a little while, I would say, but even getting just to these previous lows, 40 pip, and yes, maybe when you see that the stop loss is never needed, okay, the risk is much lower, so that's actually when you could have taken your 40 pip very nicely. Then we're coming back into the late New York, and as you can see here, what we are seeing, we are still seeing a respected bearish structure. Now that I'm looking at it, these sells played out absolutely amazingly at this bearish structure. So from 1837.5, we still with the FOMC minus, we failed to make new highs, and we reacted exactly at this previous trend line, I would say. And that's also where we can see the first and only trade I took when I was here. I took a sell when I saw the strong bearish price action, and I took out 15 pips out of it, closing at the low, especially seeing that the impulse was quite slowing down. I didn't want to take any risk. I took my 15 pips, and that's good to go. And then identify the continuation here on the bearish side. As you can see, if we just simply zoom out, that's where we can see that let me just use this also with this one. Yeah, that's a simple trend line from this 1841 down to 1832, and now down to the 1825, still closing bearish. This one is also almost, I think it's like a 75 or 68, 50%, 61.8 retracement before going back down, and further confirmation when you have the price respecting these previous lows on the left hand side, respecting and closing below the key level. That's where you could have had some impulsive scalps, 20 pip easily. We're now at 30 pips, and this is not a real trade, it was just back testing. So that's pretty much it of today, what happened today. As you can see, this is more of just back testing wise. Then we have this understanding of bullish price action. This one was seen live, this one not, and this one not. I saw it right now, and the final trade that I actually took. And yes, that's pretty much it. Understanding the bearish price action market structure is very important, and I only see it now live, but it's still a very good thing to notice. And yes, that's pretty much the market structure. Okie dokie. And yes, pretty nice, I would say. You can see here the first lower high, lower low. Let me just lower high, lower high, lower high, lower low, lower low, lower low, lower low, lower low. So that's pretty much what happened today. and I see you guys tomorrow.